Good morning. We will pay attention to goods sold and returned by debtors. The business is a registered VAT vendor. That means 14% is included in the appropriate amounts. Goods sold on credit to Blom is 1,800. A profit of 25% is made on cost price. Okay, if we sell the goods to Blom, it means that we sell it to a debtor, so we will record it in the debtor's journal. The amount that he owes is 1,800, and that equals 114% because he owes us the sales price and the VAT. If we want to calculate what is the sales price, we want to know what is 100%. So the one that we want, 100, divided by the percentage that we know, 114, times 1,800 will give us 1,579. So the income for the business that will increase profits is the sales price excluding VAT. VAT is 14%. If we want to calculate that, the one that we want to calculate, 14, divide by the one that's known, 114, times 1,800, and that will give me 221 Rand. A profit of 25% on cost price is maintained. That means the cost price equals 100%, the profit is 25%, and the sales price equals 125%. The cost price is calculated on the sales price excluding the VAT, because the VAT doesn't belong to the business, so you can't calculate cost on VAT. The sales price is given as 1,579. If we want to calculate the cost price, the one that we want, 100, divided by the one that we know, 125, times 1,579, and that will give me 1,263. In the second example, we sell goods to Nel, 8,000 Rand less 10% trade discount. So we deduct the 10% immediately. No transaction is recorded for the discount. 8,000 minus 10% will give me 7,200. So the total amount that this person owes is 7,200. On this 7,200, we have to calculate the sales price, 100 divided by 114, because we want to know what is the 100, divided by 114, times 7,200 will give me 6,316. If we want to calculate the VAT, the 14 divided by the one that we know, 114, times 6,316, and that will give me 884. When we calculate the cost price, it is very important to remember that the cost price must be calculated on the normal sales price, because when the goods were purchased, you added 25% to the cost price to determine the normal sales price. If you give trade discount, it will not reduce your cost price. So when we calculate this cost price, we will use 100 divided by 125 times the normal sales price of 6,316. And if we calculate the cost price on the normal sales price, we will get a cost price of 5,264. For the third transaction, a credit note is issued. That means we reduce the account of the debtor, and that will be done in the debtor's allowances journal. The debtor's total amount will reduce with the 997. That is equal to the 114%, because when we sold the goods, we added 14% VAT. When they return, it will also include the VAT. If we want to calculate the debtor's allowances figure, we want to work out what is 100, divide by the one that we know, 114 times 997.50, and that will give me 875. If I want to calculate the VAT, the one that I want, 14, divide by the one that we know, 114 times 997.50, and that will give me 122 Rand 50. When we calculate the cost of sales, it will be calculated on the debtors allowances figure excluding the VAT. A profit of 25% on cost price was maintained. So to calculate the cost price, we will take 100, the one that we want, divided by the 125 sales price, and we will calculate that on the 875. That means the debtors allowance figure excluding the VAT, and we will get 700 Rand. When we post the entries to the ledger, we will take into account that the debtors is an asset. Assets increase on the debit side and decrease on the credit side. So when we sell goods, we will show the total amount that the debtors owe us, 9,000 in the debtors control. That amount is made up of sales, that's 100 over 114, and VAT output. And we will transfer these entries to the credit side of sales, 7895, and the VAT will go to VAT output on the credit side to indicate the amount that must be paid to SARS as VAT. The sales is an income. Income increases on the credit side, therefore the sales is credited. VAT output is a liability, so if we collect money on behalf of SARS, we increase the liability with 1105. When goods are returned, we have to reduce the debtors on the credit side with the total amount. That amount will be split up between debtors allowances and VAT, and we will transfer the 875 to debtors allowances on the debit side, and we will transfer the VAT to the debit side of the VAT account, 122 Rand 50. That is an indication that the VAT that we owe to SARS is reduced when the amount is recorded on the debit side on debtors allowances, because now we don't collect the money on behalf of SARS, so we don't have to pay that 122 Rand 50 to SARS. For the cost price, when we sell goods, we will debit cost price to increase the expense on the debit side. We will credit inventory to decrease the inventory on the credit side. When the goods are returned, inventory will be debited with 700 to increase inventory, and cost of sales will be credited with 700 to decrease the expense. What did we learn? When goods are sold, the sales price includes VAT collected on behalf of SARS. A liability account for VAT output is created. The sales price must be divided between the sales, that's an income for the business that will increase the profits, and VAT output. When goods are sold at a discount, the discount is not recorded. You just subtract the discount from the total amount and you don't record trade discount or cash discount. The cost of sales must be calculated on the normal sales price, excluding the VAT, but before you deduct the discount. So you will take your sales price, take the VAT out of the sales price to determine what is the normal sales price, excluding VAT, and you will calculate the cost of sales on that figure. When goods are returned, the business didn't collect the VAT on behalf of SARS on the goods returned. The VAT included in the sales price of goods returned can be claimed back from SARS, therefore we will debit VAT output. The amount on the credit note issued must be divided between debtors' allowances to create an expense that will decrease the profits and VAT output. When goods are sold, VAT was paid to SARS on the total sales price. When any of these goods are returned, the VAT is not collected on behalf of SARS and the amount can be claimed back from SARS.